Welcome, ladies and gentlemen, to Commodity-TV, and I can tell you one thing: uranium is hot and uranium energy is even hotter. Amir Adnani and Uranium Energy are in full throttle. The uranium market has not even twitched in the spot price, but NYSE has positioned itself perfectly. Not only can they ramp up production at the Hobson plant within 6 months, but they are now starting to build up a physical uranium inventory to help secure the supply to the US, but also to make a nice future trading profit from it. It will go with uranium like with silver. All of a sudden it starts and everybody rubs his eyes how this could be happen. NYSE becomes a top player in the uranium market in the US. They just acquired 800,000 pounds of uranium from US stockpiles, consisting of 500,000 pounds for April delivery and 300,000 pounds for December delivery. Including the previously announced acquisition of 400,000 pounds a few days ago at $27.29 per pound, NYSE has now contracted to purchase a total of 1.2 million pounds of U3O8 at a volume-weighted average price of $28.94, which is around $29 per pound. That's brilliant, ladies and gentlemen. The company is additionally collecting definitive agreements from institutional investors to purchase an aggregate of 10 million shares of the company's common stock at $3.05 per share. The gross proceeds are approximately $30.5 million in a registered direct placement and are expected to be successfully completed around the 19th March this year. This is a successful implementation and further expansion of the physical uranium strategy. 3 objectives are being targeted here: strengthening the balance sheet as uranium prices increase, ownership of a strategic inventory to support future marketing efforts with utilities that can supplement production and accelerate cash flows, and, when it's increasing, the availability of production capacity in Texas and Wyoming to take advantage of specific opportunities for US origin uranium that can command a premium price due to the scarcity of domestic uranium production. Upon completion of the offering and delivery of the contracted tumbled uranium, NYSE will have approximately $95 million in cash, equity and inventory, including approximately $35 million of US stored uranium and $65 million in cash and equity interests, depending some roundings. By building up a physical uranium inventory, they can then quickly profit through spontaneous sales in the event of sharp price increases, which there have always been in uranium history since they have acquired the uranium cheaply, as said, at about $29 per pound only, which is below most industry production costs. It also gives utilities greater marketing flexibility while freeing up NYSE's domestic mine production for US uranium reserve and other US tailored opportunities. The market value of the 19.5% stake in uranium royalty rose to more than $34 million after URC announced the acquisition of royalty interests in the world-class McArthur River and Cigar Lake uranium mines. Most importantly, debt was reduced from $18 million to $10 million under the company's current credit facility, providing even more room for the future. With about 214 million shares outstanding, they now have a market cap of approximately $650 million, making them a heavy player in the uranium market. The news for closing the long-term contracts is tightening and tightening. Uranium is hot, and when it breaks out, we will see prices of $45 to $50 per pound very quickly. Would be great for NYSE and their share price. My team and or myself are or may be shareholders in the companies presented, and they are or may become part of the SRC Mining Special Situations Certificate. Thanks for watching us, and bye-bye from Switzerland.